What's up, everybody? My name is Joe Brown, and this is Heresy Financial. Okay, if you haven't seen it already, a couple of days ago, I did a video showing how margin balances are at all-time highs. We've got a very fragile, very risky stock market right now. And I know this video is going to trigger responses like, make up your mind, and you can't have a crash and a melt-up at the same time, so which is it? And I know that's what it sounds like, but right now, options volume and sentiment indicate that the current sell-off is close to over. Not only that, but it indicates a big rally is around the corner, which could very well be the final melt up, the final blow off top before the real crash really starts. Ready? Let's dive in. All right, here's the first chart that we need to look at. This is put volume across all symbols. You can see this absolutely spiked recently. This last data point was from Friday, December 3rd. And in fact, this last spike was higher than the spike in all put volume for February of 2020. Now, if we dial this in a little bit and look at just SPX puts, that's puts on the S&P 500 index, it's obviously not as extreme, but it is still very high. What this means is that expectations of a decline in stock prices is very high. And now I want to direct your attention to a chart you should be pretty familiar with. This is the CNN Fear Greed Index, and this takes into account a number of factors including momentum, volatility, options volume, and it indicates it puts those all together, indicates whether there's broad fear or broad greed in the market. And you can see that over the last few weeks, the sentiment has just dropped off of a cliff. Went from extreme greed just a few weeks ago that we haven't seen more than a few times in the last few years. Dropped to where we are now, just bottoming out here at extreme fear in the markets. Now, both of these things that I've shown you today, I personally take as contrarian indicators. This is because the more widespread, the more broad expectations are, or an opinion is, the more it's already priced in. Here's an example of how that works. Let's say some guy has a crystal ball that really works and everybody knows it. Puts up a video that everybody sees, goes online, goes on the news and shows that tomorrow the price of Apple's stock will hit $140, guaranteed. What do you think would happen today? Well, everyone would start selling it today. They're not going to wait until tomorrow, and everyone would continue to sell it today as long as it hadn't yet hit 140, because they know at some point tomorrow it will hit 140. So as long as I'm selling it above 140, I will have a chance to buy it lower at 140. And then if it does hit 140 today, suddenly people will stop selling because they know if I sell it here, that's pointless. I know tomorrow it will be worth 140. But if somehow people accidentally did sell more and it did go below 140, instantly people would start buying because now you're buying it on sale. You're buying it 137, 138. You know it's guaranteed to hit 140 tomorrow. So now you can buy it 138 and you know you'll have a chance tomorrow to sell it at 140. So the expectation or the certainty that tomorrow the price will be 140 actually makes it happen today. The more certain the market is of a future price, the more that price is brought into the present. This is precisely what people mean when they say, oh, that's priced in already. Or when they say buy the rumor, sell the fact. It just means that expectations of it going up or down are so widespread that everyone who is going to buy on the way up or going to sell on the way down have already done that in anticipation of the move, and the move has then already happened. So when sentiment gets to extremes like it's at right now of extreme fear, that means expectations of further declines are extremely widespread, which means that more than likely that move has already finished. Now, I want to mention, because I don't mention this enough, I don't think it's possible to mention this enough, the market is extremely overvalued, wildly expensive. The margin position across the stock market on net is stupid high. There's so much leverage, it is just unbelievable. But it doesn't look like the crash is here just yet. It does look like we've got another big rally to go. Further than that, we haven't had the sort of catalyst that it would take to cause a major crash in the stock market yet. To cause a crash, a liquidity event, the type of crisis that I'm forecasting that will really cause some major panic selling, nothing like that has happened yet. And it takes time for that rot to bubble its way up to the surface once the easy money starts getting pulled pulled back. It takes some time for those things to work themselves to the surface and for something completely unexpected to pop. Then it prompts the vicious unwind. Then it causes the Fed to have to reverse the taper to unleash the mother of all QE. Just not quite yet. It's coming, just not here yet. And despite what I would like to believe about myself, I do not have a crystal ball, so I could be wrong. I've been wrong before. I'll be wrong plenty of times again, so don't take my word for it. I'm just some guy on the internet. As always, really appreciate you guys. Thanks for watching. Have a great day.